Sup degens, welcome back to your home of crypto and macro analysis. And we got something good today, man. We're happy. The charts are going higher. Bitcoin's looking nice and healthy. It's made a counter trend move over the weekend, pushing up to $67,000, which is really nice. We also do see Biden and the US with the printer out with another 1.2 trillion with a T. $1 trillion being injected into the economy, and a lot of other interesting stuff. We do see Dogecoin making a move. We're going to be talking about that and discussing the implications for other meme coins and portfolio positioning. So without further ado, let's just start it off by jumping into the Bitcoin charts. Now, the first thing to realize here is that we have made a higher low here on the 4-hour time frame, which is looking really nice. We also have the possibility of putting in a higher high. So what that would mean is we're looking for closures above this level here at around 68,000. If we did see that, it's very likely we're going to test this resistance, which is coming in around 68,000 to 69,000. And that's where we could be looking for some short-term pullbacks, okay? So my base case hasn't really changed since last video. I think that although we've got this really strong move, we'll see today on Monday in the US time zone how things play out. Is there that ETF flow again from institutional money? If there is, we'll likely see Bitcoin break on through that $69,000 region, try for new highs. However, if flows stay muted, like the trend was beginning to get towards last week, there's more of a chance that we don't really see much continuation. And in that case, I'll be looking for some sideways chop between this range. Now, as with everything, it's very important that we identify key levels that would have to change our bias in the short to medium term. So for me, if I was to see any closures, even on a 4-hour time frame, looking below 63,500 here, which is that recent higher low that we put in back on previous Saturday, that would give me the suggestion that we're going to retry these lows here, coming in around the low $60,000 region, where we'd at the bare minimum likely expect a bounce. Now, to the flip side, well, we do see that there's this significant resistance level here in the high $68,000 region. And I think that the main way we would break through this in the short term is if there's some positive fundamental catalyst, be that regarding most likely the ETFs. I think that's what it will come down to. So keep your eyes on the ETF flows. If you see positive numbers there, it's likely we could get short-term continuation. But my base case, as I've been saying, is I do think we likely go sideways in between, say, I'll give you an exact number. Let's say between 68,500 down to about 62,000, 63,000. I think the most of this month we will probably spend within that range, with some fake outs above to get the bears out of their positions and below, okay, to really make sure that both sides of the market are pretty uncomfortable. Now, one thing I do want to point out is that we could be seeing a reversal of this short-term downtrend here. And the way I'd really like to see that confirm is to have this yellow moving average cross back above the green. You can see that through Bitcoin's history, when we do get across either to the upside or the downside of this strategy, it is a very effective way of gauging price over the coming weeks. So you can see the last time we got across was on the 17th of March back here. And that did precipitate more downside action, with us even wicking down to the low $60,000 region. To look at some other examples of when this played out, we can see that the last time it occurred was actually all the way back in, wow, it's a really long way back. So the last time we got that signal was to the buy, on the buy side, came back in the 28th of January. And from there, we put in a massive move. That was when Bitcoin was back around $41,000. Similarly, the prior downside move came in around the 13th of January, and that played out all the way down. So I'm just going to mark off a few of these so you see how powerful this is as a strategy. Okay, so that's the last two iterations. We have that iteration here. You can go back through and test this yourself. But we would see that we would get that crossover and this long bias confirmed with any closures above $73,000. Now, these are moving averages, so that number is going to come down as we wait. So if we chop sideways here within this range, these numbers will get lower, and it will very likely support further continuation to the upside. So if you're bullish at the moment, sideways is beautiful, man. Sideways is beautiful. Very, very, very fine. Now, with that being said, I do think if we try lower, it's going to present an incredible buying opportunity for those of you with still capital on the sideline. So be open to either direction of this market at the moment. I think chop is, I'll give it a 60% probability. 20 of breaking through to the upside, 20 to the downside. But once again, work out what time frame you're trading on and ensure that you're positioned appropriately. Now, to the macro stuff, my friends. We have President Biden signing a $1.2 trillion US spending bill. And whenever you see this, if you're in crypto, this should just make your eyes light up, right? Like it's music to our ears to hear that the US is just systemically devaluing their currency and showing no desire to stop spending like a drunken sailor. One of the funniest things to pull up is, and let me just grab this up. I'm sure many of you have seen this, the US debt clock. Look at this debt clock website. So this is tracking in real time the accumulation of US debt. And we can see that we're up 34 trillion and 600 billion, man. These numbers are just insane, all right? And they've just issued another 1.2 trillion. Now, over time, what this is going to do is as they have more money in debt in terms of the US public sector, it puts increased pressure on the Federal Reserve to lower interest rates, because if they have to finance that debt at higher levels, it puts downward economic pressure on the entire economy, and it actually leads to something called crowding out of private investment. The way to think about that is there's only so much money in the economy, and if the public sector, i.e. the government, has an increasing amount of that money that's circulating in society that's required to repay their public debts, it means there's less financing for private firms to pursue investment and to repay their debts, okay? So it can be a really negative spiral, and the main way they're going to get out of that is through inflation and monetary printing. So whenever we see these numbers, like our good friend Joe Biden signing that 1.2 trillion spending bill, it's supportive of long-term positive conditions in crypto, but also short-term, because traders like yourself or me, we see that trend and we can price that in now. So we don't need to wait for that liquidity to actually get into the system for it to begin to impact prices, because market participants are forward-looking. If you're a trader, you live sometime in the future, right? Like your time frame preference will dictate when that is, and that's cool. You can do it many ways. But in general, man, like at least a few months for most people, and sometimes for longer term investors, years, like 5 to 10 year time frames are completely standard. Now, the biggest thing I see from a degen front, and as I said to you guys, like we combine these things here, the biggest macro news, then straight to the degen shit, right? Like, because we need to know how to make them stacks on this stuff. We can't just be buying Bitcoin. We can't just be trading in stocks. We've got to interpret this data and information, but then use it in a absolutely ridiculous, scandalous way that is just unfit for civil people in this world. So what we do see is our good friend Doge making a move. Now, there was this article here pointing out how Doge is up over 5%, but that's not what's interesting. What's interesting is that its price rise also has corresponded to increases in social activity. So based upon Luna Crush, they're saying that socially driven engagements like likes, comments, retweets have totaled 30 million in the past 24 hours and are trending up. Something interesting with meme coins about how virality and that community just making a noise, drawing attention, can be a real catalyst for growth. Now, I do suspect that there could be other catalysts that are getting priced in before you and me are privy to it, and I'll come back to that. But let's have a quick look at the price action of the Doge chart. Now, what you see here is I've got this up on a 5-day time frame. So each one of these candlesticks represents 5 days. So this is a longer term view of the market. And what's interesting here is you can see we've been in this range for coming on 695 days. Now that's from back all the way over here when we broke down in the 21st of April 2022. And right now we're consolidating around these highs after making that first move up, and we're sort of deciphering where we want to go next. All right. Now I think that Dogecoin is preparing potentially for a really big move to the upside. And as we're doing this, I see Bitcoin rallying over 67,400. We're pushing up. Beautiful stuff, guys. Really good to see. But yeah, with Doge, I think the opportunity here is significant, because you will note that the last time we broke out of a range where we had such a long period of consolidation, sorry, let me get rid of that. It comes back here, and that was early 2021. And I don't know if you guys were around in crypto back then, but if you were, you'll remember that that was the most insane period of the bull market, where Doge just went from a $400 million market cap coin to the hottest thing on Twitter, Elon pumping it, Saturday Night Live, people saying it was going to get to 100 million market cap. and was really wild. So when we did break out of that range back in 2021, we put in a modest 13,200% move to the upside, which is just insane. Now, obviously, if we do break above this range here, so the real thing I'm wanting to see is I want to see closures on this 5-day time frame, ideally above, let's just for simplicity's sake call it 20 cents, okay? If we get like longer term time frame closures above 20 cents, that's going to be the confirmation I'm looking for to show that we're very likely going to test higher. The first point we would have any resistance really at all, it comes in around this 33 cent region, which is a really nice, almost 2x from here. And realistically, over time, it's very likely we retry the all-time highs. Now, further to this point, we do see that we have bullish momentum in the critical region, but generally this is what you want. A lot of people misinterpret RSI and they say, look, you're overbought, you're heading to zero, brother. But that's not how it plays, right? Like on these really significant all-time moves, and I will reference the previous move back in 2021 as well. You see that when you get into these extreme regions, you stay there for a while. And that's what marks a truly like systemic extreme move, is these long periods of being in extreme regions, right? So don't get scared off by the fact that we're getting momentum for the first time ticking up here. I don't view that as actionable to the downside. In fact, that gives me more of a bullish bias. So things are setting up really well for Doge. And the most interesting part about this is that you can think of Dogecoin as like a barometer for the overall interest that people could likely have in other meme coins. Doge attracts a certain kind of audience, and it also tilts the meta of the space towards speculation in a way that is really supportive of us who have meme coin portfolios. Now, if you think about it, when retail come into the space, the sort of people that want to speculate on Doge are going to be the ones that want to speculate on Pepe, and they're going to want to speculate on WIF and Geo Biden or whatever your chosen token is. Also, as Doge goes up, it reprices the top level of what memes can be worth. So then when people compare the meme that they've chosen towards Doge, the ceiling's higher, and then the relative valuation can increase. So it's going to be really good if this does happen for lower cap meme coin players. But on that, I think you need to really consider how you're approaching meme coins, because if you're just throwing cash wildly at stuff that's like under 1 mil market cap, or even like under 20 mil market cap, a lot of that stuff isn't going to ride this trade because it's a rug pull and it's going to zero. Whereas if you can identify like 5 blue chip memes across narratives that you like, potentially on different chains, and realize that that could be a beta play on what Dogecoin does, there's a really strong opportunity to position yourself, potentially, if we do get this breakout. Or alternatively, another way of approaching this is going long on Doge, maybe with some leverage. You could put a stop loss below this wick here and identify that if we take out this wick, it's likely that this trend and breakout isn't in play for the short term. And if you use some leverage there, that could be a way of getting that increased exposure. Because at the end of the day, like if you're trading meme coins and we say that the all-time high is a tentative target, right? Like we could go a lot higher if this bull run continues. But if we do say it's the all-time high, that is only from here, only, what a crazy world, only a 4.3x. Okay, so there's still a lot of meat on the bone here. And I'm actually expecting Doge to take the spotlight for a bit. It just seems like it's ready to go. It's still relatively cheap. It's only breaking out of this range now. So I'm going to be looking at it very, very intently. Now, in other news, one of the other trades I've taken, and I made a post about this on my Twitter, was I went long Say today. Now, let's quickly pull up my Twitter to reference this post to show you why. Now, if you do want to get these posts in real time, just head over to my Twitter here. I also post the videos, but that's all good. And you can see that this is the reason I've taken the position on Say. So the first reason here is that it's a beneficiative of the Sol narrative because essentially, like this is that alt layer 1 theme. It's got the fastest transaction times, which is a key marketing point and one of the main reasons why people got around Sol. Also, it generally lags Sol. So you can see on this chart down below that this is Sol in the orange line, and this is Say. And you can see how we've had this correlation throughout the market, but that Sol moves first. So we've consolidated here around highs after making roughly a 10x move. Then Sol's broken above it, leading the pack again, right? Like here. So I think there's a really good catch-up trade for Say. And I love the setup from a technical perspective. We also have other technical reasons, but I won't get into that now. You can read this post in your own time. But I've taken a tentative long position here, and we'll be updating that on future videos. Now, that's pretty much everything for today. It's going to be really interesting to see how this plays out as we move into the trading week. We'll see if this was a counter trend move that just happened over the weekend to fetch liquidity, which very frequently does happen. We'll follow this up again tomorrow. And man, how good to have you along on this journey with me. All right, gang. Thank you for your time, and I'll catch you soon. We out.